Welcome to PubKey, everybody. Thank you so much for being here. We have a very special guest, the founder and CEO of River Financial, or just River? Just River now? Drop the financial is cleaner. Yeah, exactly. So
test.
We're going to be covering a lot of different topics tonight around the point of, I guess, financial institutions in the Bitcoin space. We're going to talk about River, obviously, the role of banks, the, I guess, progression into, I don't want to say it's a Bitcoin bank, it's a bad word, but effectively, right? What are the services that customers use banks for, and how can Bitcoin clean up some of the operations of these institutions and provide better services for the customers and what they're ultimately looking for? We're going to talk about the Bitcoin treasury companies as well, because that's kind of a topic du jour, and there's no escaping it, no matter how hard we try. As always, this is a tavern chat, so please feel free to interrupt if we use a term of art, technical term of art, or that you don't quite understand and you'd like some clarification on that, or if you want to double click into a particular topic that they're discussing and you want to stay on that thread a little bit, feel free to interrupt. Just raise your hand. I'm going to be sitting in the audience and handling the Q&A for tonight. It's going to be Drew and Alex, and thank you for being here. And Drew's coming back, which is sweet.
Just solving some AV issues.
All right, there we go. We've had a couple of AV issues. We're streaming on YouTube, but not X this evening. We'll get that sorted. There's always something. You know, it's a bar. So anyway, welcome, please.
And we'll also be wrapping up the today's discussion, discussing geopolitical conflicts around the world. So I guess maybe just to start, so I'm Drew. You've seen me around before. Vaguely involved with PubKey, but also work for Cathedral Bitcoin during the day. I guess, Alex, maybe just to start off, would you mind just giving, introducing yourself? And I think maybe the first question, I think it'd be great to just set the tone really for everyone, because you've been in Bitcoin for so long now. It'd be great to kind of hear, your story, how you got into Bitcoin, and kind of how that brought you to start River.
Sure, yeah. I'll keep it brief. So my background when I was in college was aerospace engineering, but I actually got really interested in economics on the side and this concept of alternate money. I read Friedrich Hayek's The Denationalization of Money when I was a senior in college, and came up with this harebrained idea of starting my own money backed by commodities. And but I couldn't really figure out how to do it without going to prison. I was researching a lot about, people who had tried before, Liberty Dollar, things like that didn't end well for the others who had tried. So I kind of put that on pause. Fast forward, I'm in my first job out of college. I was doing consulting because I didn't really know what I wanted to do. I came across Bitcoin, and I was like, oh my gosh, this fulfills the prophecy. And so I moved to San Francisco, quit my job, moved to San Francisco at the end of that year, and to be a Bitcoin engineer. And so I've been working in the Bitcoin industry more or less ever since then. I've worked at a number of startups. I also went to grad school in the Bay Area a few years after I moved out there. I helped teach the first Bitcoin class at Stanford in 2015. I was the teaching assistant for Dan Bonet in the computer science department. And it was funny back then. It wasn't popular because it was a relatively large class, but it wasn't a really big class. Back then, AI was super popular, and then crypto got super popular a few years later, and no one was taking AI classes, and everyone was taking crypto classes, and then it swapped again now. So, and then before starting River, I was at a fund called Polychain Capital, where I was doing. I was on the investment team, but I was also the only engineer there, so I was just building some infrastructure for them as well, mostly focusing on Bitcoin companies to invest in. And then I left because I really realized I'm not really all that into investing. I really like building things and running a company. So started River in 2019 with the vision of building the Bitcoin Bank of the world, more or less. I had seen Coinbase start that trajectory when they started the company and pivot to becoming obviously a foundational piece of the industry and a very successful business, but kind of resembled more of a casino than something I would have wanted to see. And so I said, well, okay, no one took this other path. I don't see anyone doing it, so I might as well, because I had all the pieces. And so that's a long story short of River. Today we're 60 people, about 2.3 billion of Bitcoin under custody. A lot of our clients also self-custody and withdraw. And we are, basically where we're headed is not just being a place for Bitcoin brokerage and custody, but also being a place where you can do your fiat banking as well. Our vision is that we're entering a dual money era, and that people will largely continue to spend and earn in dollars with Bitcoin payments here and there, but they'll save in Bitcoin. And so we see Bitcoin eating the savings account, but the checking account still being in dollars.
No, that's great. And I remember we first met, I think, it was 2019 when my friend AJ and I were working at Galaxy, and AJ basically found this company then called Alto Financial in 2019 and reached out to Alex, basically trying to have him let Galaxy invest. And it was interesting at the time because when we talked to folks at Galaxy, which for those of you who aren't familiar, if you know Mike Novogratz, it's basically the crypto merchant bank that he started. But we would sort of make the pitch, and it's like, this is such a great company, such a great product. It's a Bitcoin-only exchange. And they have quite shitcoiny tendencies themselves, Galaxy, as they themselves would admit. But they were sort of like, wait, what? Why would you not want to take the ICOs and the shitcoins and the pump and dumps? No, not that Galaxy would ever participate in such nefarious activities, but mostly just saying that a lot of times the altcoins have actually the juicier spreads and more money to be made when you let retail punters buy and sell.
Yeah, so funny story actually when AJ emailed me. So for those of you who don't know, AJ is his full name is Antonin Scalia, and so I got an email from Antonin Scalia interested in learning more about River, and I was like, this has got to be a scam. Like Antonin Scalia isn't emailing me, and so I just archived it, and then he emailed me a few weeks later. It's like, wait, hold on a second. Then I did some Googling. I was like, oh, okay, maybe this is legit.
And the justice was well dead at that point. Yes. But yes, so I've known Alex for some time. I guess maybe one thing too one thing we're trying to do a little more of too is a lot of folks, like myself included. I only got really into Bitcoin in my first job out of school in 2017, and a lot of times I think some of the heritage gets forgotten. So I'm curious, like, what was the universe of Bitcoin-only companies to invest in back when you were at Polychain?
There weren't many. I mean, there was just hardware, mostly hardware wallets. Those were the only real options. It really just wasn't much of an opportunity. That's kind of honestly, I saw that because I was working at a fund and I was mostly just interested in Bitcoin, and I was like, well, where's the person building the company I want to see exist? And I couldn't find it, and so I was like, all right, I'll just do it. So yeah, that's.
No, which Maxis everywhere are grateful. I think maybe talking a little bit about River. Obviously, Bitcoin only. PubKey is a Bitcoin bar. I think the universe of Bitcoin companies has changed a lot. Obviously, you have now even whole venture firms and venture capital funds that are solely focused on sort of Bitcoin VC. But fundamentally, we are still talking about a core protocol. And there certainly have been some dramas with some of these core protocol changes that are being made or not made. Whether this be something like Taproot activation, impart enabling ordinals and inscriptions and really NFTs on Bitcoin that started in 2022 and 2023. And that has caused quite some drama. Now we're talking about, there's a lot of conversation around potentially what additional soft forks could be, whether it's things like returning previous opcodes like opcat, which allows you to get some additional functionality with Bitcoin scripting language by concatenating two strings of data. We're talking about things like covenants, and I think one particularly topical discussion point has been around filters and whether Bitcoin Core should or should not have certain filters in the mempool policy. And we did a detailed meetup about this a couple of weeks ago, so we won't get too much into it, especially because our resident technical expert here at PubKey, Mr. Arbed Out, is not presently with us. But I guess one thing I'd just love to get your thoughts on, thinking about the state of Bitcoin. What do you make of some of this recent discussion? You can weigh in on any one of these particular topics if you want to, or just on a more meta level. But you've been close to the protocol for so long. Be very curious to hear what you think of this current debate around some of these new opcodes or even transaction filters.
Yeah. So at a high level, I've been involved in the kind of, I've been adjacent to core development for quite a long time. I ran the San Francisco Bitcoin developer meetups. I'm on the board of Brink, which funds a lot of Bitcoin core developers. I try and stay out of too many of the flame wars, but the recent debate around should like Bitcoin mempool policy, I think has been really overblown. I do think there are important conversations to be had there, but I think at the end of the day, my take is that what matters really is the consensus code. Mempool rules matter. I sort of lean in the camp of give people the flags to decide what they want to include in their mempools or not, and trying to sort of, police too much at the mempool level is probably a mistake. I think that this has been used to, I think this specific issue has been used to attack core devs a bit too much. It's been blown out of proportion. But these are fair debates to have. So I don't think it's totally legitimate to debate specific functionality in the mempool because those things do matter. They impact how applications work. They impact, how mining happens at the end of the day. These defaults do matter. I think it got a little overblown. As it relates to soft forks, I think it's important that we kind of keep have sort of the muscle memory of how to do a soft fork, because I do think it's important that Bitcoin can adjust slightly here and there. I think the quantum computing question is obviously a big example of where there are existential threats to Bitcoin that we need to know that we can change things if that happens. Covenants are interesting. I've sort of yet to, I would say, for those of you who know what covenants are, it's this idea of can you lock Bitcoin in a way that controls how all the Bitcoin after that is spent. So it's not just a rule for this Bitcoin, it's the rule for this Bitcoin and all future transactions of that Bitcoin. It's kind of an interesting concept. I've yet to see a real, a use case where it's we have to have this, right? The last example of a use case where it was we have to have the soft fork to unlock really key applications is SegWit. SegWit, that soft fork fixed some major issues with Bitcoin transactions that unlocked the ability for the Lightning Network to work. Everything after that has been kind of interesting, but kind of marginal. So that's how I feel. I mean, I'm more interested in the great consensus cleanup soft fork, just fixing some of the known little bugs and quirks with Bitcoin would be a nice win. But
I have a question about this. So there have been folks talking about rolling back SegWit and Taproot. Do you think that this is a bit of an attack on Lightning? Is this a veiled attack on Lightning where they have the JPEGs and some other stuff that they're calling spam, but SegWit, I think this has been lost in the conversation. SegWit did optimize a lot of stuff for Lightning and make that possible. And only in the last few days I started to think about whether or not this was something of a coordinated attack on Lightning. Do you think is there, or am I
I actually hadn't heard
watching Alex Jones too much?
I hadn't heard of people calling for the rollback of SegWit. I mean, maybe Luke. I think in Bitcoin you're always going to have some very hot takes, and that's good. That's fine. I haven't heard that, so I don't know. Yeah. Yes. Yeah. Maybe. Yeah. Who's the Alex Jones of Bitcoin?
And also
Marty Jones.
Marty Jones. And also, by quick show of hands, can you raise your hand if you're familiar with SegWit? Okay, so good count there. But basically, just to kind of give a brief history and kind of contextualize this, and I promise that this is basically the most technical protocol kind of focus point of the discussion, but it's nice to have someone who can talk about this and so many other broad-ranging issues. But effectively, SegWit was a soft fork that was it implemented in 2017 or 2016?
Oh, I think it went live in 2017.
Live in 2017.
I
So.
can't remember.
But so effectively, this was it kind of created a new way to sign for Bitcoin transactions and change kind of the called the transaction structure. And this is I'm bastardizing this, so Arbdout's turning over in his grave somewhere. He's not dead yet. But anyway, so basically, it was a big change to kind of how you could the types of transactions that you could publish to the Bitcoin blockchain. And it was in response to a really contentious debate at the time, which was really, should you be expanding, call it the bandwidth of Bitcoin? Should we be increasing the size of blocks or increasing the amount of transactions or the size of the total transactions in each block? And there was a really contentious debate. There's a great book about it called The Block Size Wars. And so one of the items that came from that whole debate, and folks were, I'm sure, advocating before a lot of the heated block size wars, but was SegWit that was seen at the time as being a compromise in this debate. And of course, this debate ended up being going even further, leading to the forks of Bitcoin Cash and eventually Bitcoin Cash, Satoshi's vision, and a variety of other shitcoins that start with the word Bitcoin. But that was a really, really contentious time. I think after that, there maybe was a sense of like, we all want to be on the same team and we want to reduce the infighting. But I guess in a way, maybe it's healthy that there is such a vibrant discourse coming back to some of these core protocol questions, because it definitely felt like, for me, from the 2018 to 2022 era, like that time frame, it felt like everyone was pretty happy. And one could even make the case complacent in terms of just everything's going to be fine, we're all on the same team. So I guess it is nice to see such a vibrant discussion around just, should we be implementing these different changes?
Yeah, I think it's always good. You definitely don't want a monoculture, and I don't think Bitcoin has ever really had that. I think everyone working in Bitcoin is pretty weird already. So it attracts a diverse cast of characters. So yeah, I think a little bit of drama every now and then is a healthy reminder that that we still have this spirit of debate, and I think it's important though that ideally it stays focused on the technical merits and doesn't get too personal. But when it gets really big, like the block size war, I mean, there were death threats flying around, believe it or not, right? So yeah.
No, I think that is a good reminder there. I think also thinking about one of the other big things that's really changed, thinking about Bitcoin in the last 10 years, has been on the regulatory side. I think there was a lot of focus around, in the early days, I think there was a lot of antagonism from both federal and local governments with respect to Bitcoin. Many instances of Bitcoin and crypto companies being debanked just by even participating in the industry. I feel like that is there's been a lot of changes, obviously, in the last 12 months alone there. And there's been a variety, whether it's maybe been some favorable settlements with SEC. We recently just passed a stablecoin bill, but obviously now we've been talking about Bitcoin treasuries and things like this. I'm curious how what you kind of think to be like there's a lot of noise in the Bitcoin regulatory front. Every day there's a new tweet of XYZ states considering a new Bitcoin treasury bill. How do you kind of parse out the signal and the noise there in terms of like, what do you think are really the key foundational things that we should be pushing for here, or the key foundational policies that actually matter versus just a lot of the other noise that's going on?
Yeah, so I think that the most consequential pieces of regulation involve sort of compliance around Bitcoin and the laws around self-custody. I think that's really if you're thinking long term, what we want to really get right while we have the chance and while we're on the offensive is solidifying the laws around self-custody, non-custodial people who build non-custodial tools and write this software. And there's a piece of legislation being pushed right now in DC to make it very crystal clear that anyone working on non-custodial software is not involved in money transmission, is not subject to the Bank Secrecy Act or this whole sort of dragnet that's been created over the last 60 years or whatever. So I think that's actually the most important thing. And then after that is just the normalization from financial regulations of Bitcoin as an asset. I think, frankly, that ship has mostly sailed. So I'm not too worried about that long term. I think what's really important is we make sure that we close any risk of laws in the future preventing people from getting their Bitcoin out of financial institutions.
Yeah, no, and even some of the regulation that was thrown around back, what was it, 2020, 2021, talks of how even using, what is it, self-hosted wallets or unhosted wallets and things like that in some parts of the world, potentially having that be a crime. It is nice to see now, like it's well within the Overton window to say that, you know, self-custody is sort of a foundational right and like a distinctly American value. It definitely is very nice to see. What do you make in terms of the, how do you assess the probability of there actually being something like a strategic Bitcoin reserve or strategic Bitcoin stockpile? And I guess there obviously are two flavors. One is the US government just not selling the Bitcoin that it currently has, but obviously the strong form of that would be buying Bitcoin in the open market.
Yeah, I'm really glad it's being discussed. I'm really glad that I just think doing that and proposing that bill shifted the Overton window so far, right? The debate now is whether, I mean, just contrast this to like 5 years ago, right? We're now debating should the U.S. government be buying Bitcoin. Like 5 years ago, we were worried that the government might just totally ban it, and we'd, you know, like we'd all get all of our businesses shut down. So the norm for Bitcoin for the vast majority of its existence has just been knowing that like someone somewhere might just cut you off someday, and it's going to be game over for your business. That worry is basically totally gone now. So I love how much this has shifted the Overton window. As for an actual strategic reserve, my concern with anything that the government does, it is inherently just attracts people who are willing to scheme and throw money around, right? Anyone who's spent time working in DC knows that, you know, it does not reward people who are sort of virtuous and like have the best interest in mind. And you just see this playing out, right? Strategic Bitcoin reserve gets proposed by some really, you know, smart Bitcoiners and politicians who want to see this happen, and then Brad Garlinghouse shows up with, you know, a couple $1 million and throws money around in DC. And by the way, people in DC who are politicians, they don't have money. Like you can get a senator's phone number if you're willing to spend a couple $1,000s in a donation, right? So it's not hard to, you know, get a seat at the table in DC if you're willing to spend a little bit of money. And Ripple has infinite money. So my concern with this kind of stuff is, you know, it just will, does it create an opportunity for all of these affinity scammers to build their own legitimacy through the government? And I don't know, maybe.
No, definitely. At least one of the names that you just mentioned, I personally was shocked to see it how light the SEC punishment was, especially given, I think one of the names you mentioned I definitely deem to be a security, but that's just a personal opinion, not the official view of PubKey Bar and Grill. I think that
Ripple was found bubbling out of the streets of San Francisco, and, you know.
Yes, for those unfamiliar, Ripple, the founders of Ripple claim that it was discovered and not invented. So I think Nick Carter created a beautiful graphic of this some years ago of the early Ripple wildcatters in the sewers of San Francisco, waiting to collect the. And it, of course, beautifully, the Ripple that they discovered and kept for themselves in the form of a pre-mine, they sell on a quarterly basis, and then they book that those proceeds as revenue in their financials. So. Well, I mean, they discovered it, of course, you know, but but I think it's yeah. So we talked a little about core protocol stuff, and by the way, if folks have questions throughout, feel free to raise your hand and you know, want to facilitate the discussion here. But so we've talked about some of the major points here, which is the core protocol. We talked about changes in policy. I think related to some of your discussion around the Overton window, there's also been a big shift of just the number and type of people who are now starting to accumulate Bitcoin, if even in small size. I feel like at River, you guys have a really, you kind of have a front row seat to that, because one of the things Alex will tweet out sometimes, which I think is quite interesting, especially at times of market turmoil, is what the buy-sell ratio is from River customers. And it's always interesting to see, you know, for example, an event like October 2022, when the world's falling apart and, you know, FTX is going down, you were still seeing majority buy volume from River customers, which is sort of nice to see, and I think a testament to your customer base. But how are you seeing really the customers that you're serving change over time? Because I feel like it's probably a good proxy for how Bitcoin is changing in terms of the demographics.
It's a good question. I think the biggest growth we've seen in the last 6 to 8 months has been in businesses buying Bitcoin. You know, we still have strong growth amongst individual investors, but I would say that the last 6 months in the rally and all the price action, it just does not feel like it's been retail driven. Like we see a steady baseline of business there, but the mania just isn't what it was in previous bubbles. And so I think what we're seeing is more mature money coming to the table. Alongside, I do think there's probably like OGs doing some selling as well, which has maybe contributed to some of why we're not higher than we are. But the biggest uptick has been businesses buying Bitcoin, small and medium-sized businesses, and kind of people completing the trajectory of their Bitcoin journey. So, typically we serve, individual investors, typically what we call mass affluent and up, anyone with a good job and up, and we serve small and medium-sized businesses. And so often what you see is somebody buys Bitcoin, they're an entrepreneur, and there's a ton of entrepreneurs in the United States. There's tons of small, medium-sized businesses. And they buy Bitcoin for themselves, they get orange pilled, and then all of a sudden, maybe see Michael Saylor talking, or they're like, well, if I'm buying it for myself, why am I paying myself from my business to buy Bitcoin? Why don't I just buy it in my company? And so then they then they onboard their business. And so we've seen a huge growth in the number of businesses onboarded with us, the full spectrum, right? The smallest ones being something like a hot dog stand, all the way up to public companies, regional large businesses doing everything from auto parts manufacturing to cleaning services to doctors' offices, dentists, any business you can imagine. So that's been really cool to see.
And I think that it kind of draws a natural juxtaposition to something we were talking about earlier on Twitter Spaces, which is now obviously we're hearing a lot about businesses buying Bitcoin, but more so of the public variety. Obviously, it started with Michael Saylor in 2020 using $400 million of cash that he had on balance sheet to buy Bitcoin. That then is sort of cascaded into them owning 500,000 Bitcoin now, constantly issuing securities to buy Bitcoin. New copycats have spun up in wake of this too, whether it be Semler Scientific last year in the US or Metaplanet in Japan. And I think Metaplanet last year is the best performing equity in the world. Which for those of you who aren't familiar, Metaplanet was basically a hotel business in Japan that was defunct during COVID. And the CEO, a gentleman named Simon Garovich, he was a former Goldman Sachs derivatives trader, and now they basically have kind of replicated that Michael Saylor playbook. And then, of course, even this year, I think we've seen a handful of new entrants as well, whether it be Nakamoto with David Bailey, 21 with Jack Mallers. I think GameStop's buying Bitcoin. One of the Trump companies issued some equity to buy Bitcoin as well. I know we just sort of talked about this at length upstairs for like 30 minutes, but would love to kind of hear your thoughts again now on just this whole phenomenon, whether you think it will last and what you think will really distinguish between the folks who maybe succeed with this or don't.
So my take is, I think Saylor's clearly got a genius to him, right? The way he's able to sell Bitcoin and explain it to people, and also financially engineer MicroStrategy into this sort of type of business that no one's ever seen before, pretty amazing, pretty genius. And I think it's been overall very good for Bitcoin. I also think that everyone, it makes sense. A lot of people are trying to run his playbook with different flavors, right? Doing it in Japan, doing it in Brazil, etc. So I think a lot of these things make sense. Someone's going to do it. Really at the end of the day, like I said upstairs, is if you're doing this, right, your product becomes your stock. Your core competency needs to be financial engineering if you're running this business. And so, like for example, a Metaplanet. Well, probably, I doubt they ever build another hotel, right? Building a hotel is a lot of work. Why would you do that? If you're going to allocate work and resources, why would you build a hotel instead of doing another sort of financial engineering thing to boost the stock 10%, right? So, I think there's gonna be stuff like this. I'm skeptical that there can be too much of it. I'm skeptical that we're gonna see thousands of these proliferate successfully. So my take is it's cool, it's interesting, it's driving demand for Bitcoin, it's bringing a new flavor and attention to the space. I could see it ending poorly for a number of these companies, and it's not something I would want to run myself. I like running an operating business and building products, but hey, I like a good new drama.
No, and there's certainly no shortage of that. Yes.
That's okay. What do you think could go wrong
And again, just to repeat, basically the question is, what could go wrong? Like, how could this go wrong?
Yeah. So I think one of the challenges with things like this, these sort of speculative, you could call it a mania, right? Is, as they go on, more and more people know something isn't quite right, but it's hard for anyone to exactly articulate the exact failure mode. And so the answer is, I don't know exactly what the failure mode is, or if there will be some blow up. Theoretically, what we could see is if the NAV, the value of the company right now, for those of you who don't know the lingo, right now, if a company has 1,000 Bitcoin, but the value of the company might be 2 or 3 times that, right? Because people are expecting them to be able to do more financial engineering, to buy more Bitcoin, and they're valuing like the future ability to sort of run this play. So the premium, right, that these companies have over the Bitcoin they hold, if that collapses to 0 or negative, and they need to start buying back shares and selling their Bitcoin, like Grayscale. But with Grayscale, what the difference there was that there were a lot of people running fractional reserve Bitcoin products, like BlockFi and Celsius, that were promising interest to depositors. If you deposit Bitcoin, we'll give you interest, and we'll do this trade with the Grayscale premium and give you back returns. That's not happening now, right? That's not what's happening. Nobody is, retail consumers aren't giving people Bitcoin to try and play a game like that. So I think it would be different than last blow up. I think we would just see maybe a price crash, and it would even out at some point after, the cards fall.
After sufficient blood in the streets.
We got a question back here.
Of course, the main source of paper Bitcoin could be potentially Coinbase, but we're going to assume that they're not rehypothecating.
Yeah, so somewhere earlier you mentioned like the Overton window. I actually don't think it's really quite shifted very positively just yet. We saw Jeremy Rubin get his mortgage taken back by the bank, right? And we're an MTL registered business. Our regulators are not just state regulators; they're also like the banks that we interact with. Which, because we're regulated by the BSA, we have to interact with these banks. And the banks kind of tell us a different story. They tell us they're basically really hard on us if we hold any amount of Bitcoin at all on our books. So we have to have a very minimal amount that we use just for payroll, and we have to explain this is purely operational. We clear it out on a monthly basis, And on top of that, I've also noticed there's been absolutely no change in tone between the last administration and this administration when it comes to banks. And I'm not just talking about getting a checking account at a bank, right? I'm talking about working with banks for FBO. In fact, talking to one bank, I think a week or two ago, they told me something kind of ridiculous. It was crazy to me. This was their digital assets division, but they told me that even though we only do Bitcoin on our side and maybe a stable coin, right, which we don't even have concrete plans for that, they told us that's too risky. They don't want to interact with this. Come back maybe in a couple years. Banks tell a very different story than what the regulators say. I'm happy that the Genius Bill got passed, but honestly, it's no different.
So I actually think you're spot on. The caveat with what I said is still, if you're running an operating business with Bitcoin and you're trying to get a bank account, that's still where it's very hard. That said, I have seen some positive changes. You still kind of need to be in the, it's still sort of a who you know game there. And I actually met Secretary Bessent at the Crypto Ball, and he assured me some changes would be coming here. These things take time; they move slowly. So let's see. I think a lot of the new appointments haven't. I don't know if they've all gone through, sort of new head of the FDIC, and these banks basically had this whole litany of regulators who were all pushing them from different directions to say no to this stuff. And so I hope. It's a bit of a different story a year from now, but I don't disagree with your statement. Or let's do River Hat. Nice hat.
Just a quick one, and I appreciate River does proof of reserves. So can you opine on Sailor, MicroStrategy, Coinbase? We talked about the risk of paper Bitcoin. and you think about potential large implosions that can happen down the line, is that something that should be addressed either from a regulatory standpoint, or are there true, genuine security risks from a proof of reserves for larger players that may have ripple effects throughout the entire ecosystem?
Yeah, it's a great question. So yeah, for context, at River we do proof of reserves. So if you have Bitcoin at River, we prove every month that we have every Satoshi we say we have. There's been a debate, does this open security risks? I mean, frankly, my short answer is no. There's no security risk. Anyone actually can do basic chain analytics and see any large holders' Bitcoin holdings anyways. So it's sort of not really the case. That said, MicroStrategy isn't a financial institution, right? They don't have depositors. They certainly probably require Coinbase, who is a financial institution, to prove to them that the Bitcoin is there. Coinbase institutional custody has segregated custody, so MicroStrategy can see their Bitcoin in individual addresses and move that if they want. And so I think they probably have some pretty good guarantees there. Now, should MicroStrategy prove to its shareholders through a proof of reserves? Look, that's their decision. I'm sure they have reasons. I'm not gonna comment. Like I really, like I would, like if I was running a Bitcoin treasury company, I would do it. But it's also sort of like it does complicate your operations, right? That is like the one thing where like, okay, it is work, right? Because you got to get the big, especially if you're someone like MicroStrategy. I think the real reason is it probably introduces a lot of operational complexity that would maybe just distract them. For example, they probably use different custodians, and maybe some of the custodians have segregated custody, some have commingled custody. And so then how do you actually then do this, right? And at different institutions, and they're all going to prove to you different ways they have your coins. So I think actually, like at the end of the day, it's just a lot of operational complexity. But I think absolutely financial institutions should do it.
Yes.
Because he made a comment that we've got auditors, we've got KPMG, get comfort with them, but if you actually read the details of that, they're not actually going and checking every single wallet address. They probably get some kind of comfort letter from Coinbase that, hey, we have the coins, and who the custodians are, and take it at face value with some proprietary.
Yeah, and I mean, look, I think at the end of the day, that is like Coinbase isn't going to lie, right, to KPMG about how much Bitcoin MicroStrategy has.
No,
but they'll do
never.
a confirmation. But you can see how like, okay, if we start having layers of this, right,
It was more from a standpoint of strategy is the role model. They can get away with it. You've got more and more public Bitcoin
Yes.
companies, and everyone can use that as
Yes.
air cover to not publish their reserves.
I think that's a great point.
An issue.
Now, a couple of things. Some still are. Metaplanet is, for example. But yeah, I think it does raise a great point. And to your point specifically about auditors, it is funny how auditors like the job of an auditor is just to sufficiently like kick the tire where like, oh, it seems reasonable enough. And so if you just can provide some like a couple different statements that show the same thing, it's like, oh, reasonable enough. But yeah, it's sort of similar in a way, I guess, to like insurance too. If you were to get like custody insured, like this is all a game of like outsourcing liability in a way. It is nice when it's sort of mathematically done, especially I think with exchanges, given our track record in Bitcoin in general. I think this does raise.
I would say something over that. Sorry, auditor's job is not. I was in PwC for 19 years. When GFC happened, we noticed. I'm not an auditor, but we noticed the way AIG was valuing those esoteric assets were totally different than how Goldman's of the world were valuing those assets. And PwC refused to sign the audit letter. And that's when actually they had to, and because PwC actually took that stand, and then the market kind of came around and all that. So it's not a reasonable test. There are different types of audit. Just wanted to clarify that. It's
Great
unfair to say
clarification.
that.
Yeah.
It's just totally unfair to say that auditors just do reasonable tests. They do very thorough tests. There are other kinds of tests, agreed upon procedures and AUP, what you call. That is based on the client, but that's a different type of audit. So I just want to make sure.
Great point. And I did not mean to throw auditors under the bus there.
I don't like auditor, but that is unfair point. But I have a question for Alex. Look, I mean, let's forget about for a second the public market. Public market is doing financial engineering. You are serving private market, private companies. And I feel that market is much bigger. And there are a lot of well-run companies in the private space. They have a lot of good net income, but they don't have access to all the financial engineering happening in the public space. So what kind of solutions and services you're providing beyond them buying spot Bitcoin from you? Like, are you hand-holding them, like this is how you should buy, this is the step, all that kind of stuff? Like, are you doing anything beyond just giving them a window to buy Bitcoin?
Short answer is no. Our value proposition is keeping things very simple and providing a very high quality place to buy and custody Bitcoin. We don't, like I was saying upstairs, we're not finance people. We don't offer anything where we can't sleep really soundly at night. So we don't do lending, we don't do derivatives, we don't do any fancy sort of things like that. And that's our value proposition, right? We're minimizing complexity and risk. And that's what people want for their Bitcoin custodian, and that's why people use us. If somebody does want to get more exotic and advanced and start doing like a private credit offering to buy Bitcoin for a private company, we can introduce them to investment banks or other people who do this kind of thing. But really our core competency is computer security, operational excellence, and building really easy to use high quality products and not messing up.
You mentioned that Bitcoin's primary use case right now is as a way to save. How do you see its use case evolving?
I think it's going to be its primary use case for a while, and I think its use case as a medium of exchange and transacting will continue to grow here and there. I think there's still no mass market use case for Bitcoin as a medium of exchange yet, other than, but it does sort of fill gaps in the financial system where there just isn't a traditional rail. Stablecoins on Lightning, I think, might change this a bit, right? Stablecoins on Lightning might be the back door to get Bitcoin as a medium of exchange, as all of these, if stablecoins on like Taproot assets or something like that, if all of these wallets start integrating Tether on Bitcoin, then they can also easily support Bitcoin payments. That might lead to something unexpected over the coming years. But so yeah, that's my short answer. I think predominantly, like really, if you look at globally in the market, people save in Bitcoin, they still want to spend and earn in dollars, and Bitcoin as a medium of exchange is still relatively niche.
Actually, one quick question, Thomas. Have you noticed any change in the PubKey volume in terms of Bitcoin payments? Because PubKey famously, despite what they say in Bloomberg, does accept Bitcoin for settlement for bar tabs. No, so has there been any change in that in the last couple of years?
Definitely. So we were sitting at about like 2 to 3%, before Trump. After Trump, we're at about like 5 to 7% of total transactions are settled in Bitcoin. We're also going to start to test, some things. We're going to test some things to, potentially juice that. I think it's true. This is also like a niche, right? Like novelty. Like you have Bitcoiners traveling from all over the world to like come to PubKey for, these events and everything else. They want to spend their Bitcoin. That's not like a regular habit for them. I agree. You want to save in Bitcoin. I do like mechanisms where you can spend your dollars and you can receive in Bitcoin, like Strike, and hopefully we see other ones like those exist or come to fruition. Square is also implementing. It's going to make it a lot easier. That's still, that's a test case, an edge case right now.
When you said we're working,
What are you doing with the Bitcoin that you're getting paid in?
We hold it forever and ever, as long as we can. I don't want to say diamond hands, but we'll die before we have to.
when you said you were trying out new things, I thought for a second you might have been talking about XRP acceptance as well. You had another.
Not today.
Yeah, maybe a comment and a question. First, a comment about your thoughts on, like, the ultimate proof of reserves is just let people withdraw anytime, 24/7, 365. What do you think about that? And then if you could comment on the bit license as far as New York goes and River, and like, is that a hurdle that you can't clear, it's not worth clearing?
Yeah, good questions. So yeah, the best proof of reserves is withdrawing your Bitcoin, right? And on River, you can withdraw your Bitcoin whenever you want. We set up auto withdrawals. We have free withdrawals, so you can have a zero fee DCA, auto withdraw, free to self custody. So you're keeping Bitcoin on River for a very minimal amount of time. As for the bit license, so yeah, I mean, it's not that we can't get it. It's that is it worth the cost? And the cost isn't really it's not the cash cost of it. It's the operational burden that the main concern I have about the bit license is it would slow our company down by 20%. And that's really the cost that I want to avoid. And the mechanism that this happens is through all of the little things that they require you to do on a regular basis. And by the way, everything that they ask you, these regulators ask you to do, whether it's a weekly meeting with them or pulling data for them and them reviewing your data, you pay them by the hour, right? So New York Department of Financial Services that isn't funded through tax revenue. It's funded by the people they regulate. So you have a very perverse incentive here. Other regulators are much lighter weight, so it's still there, but it's much less heavy-handed. With New York Department of Financial Services, the way I would describe it, and I hope this doesn't come back to bite me sometime, but it kind of feels like signing up to open a restaurant in a mafia-controlled neighborhood, right? You're gonna make money, but you got to leave the envelope on the counter, right? To keep them happy. And I just, at a certain size, it makes sense. If we were really institutional scale, it could make sense because you want your institutional clients in New York. But I'm just worried it would slow down our ability to ship products to the rest of our customer base.
Can the federal government force New York?
I don't know.
Yes.
Yeah, maybe. If some regulatory agency in DC takes control of this sort of thing, maybe.
Well, they're very hands-off. The NYDFS is one of the most powerful financial regulatory bodies in the world. Because of the history of Wall Street and the importance there, they're very significant. Yes, the federal government, New York State also has control over it. So technically they report to the governor. So if we get a good governor that wants to change the direction here, that could be really impactful. The federal government does have some oversight there. They're not touching it because the NYDFS is pretty important.
Well, I think one really interesting conversation that happened here was in the last 6 months. We had there was an event for a Democratic congressman who will remain nameless, but basically, again, talked about the low barrier to influence in...
we can name him.
Oh, we can name?
Yep.
Okay. Do you want to name or do you want me to name?
Please proceed. You were
Well,
at
no,
the
you can- I
you
mean,
were
you
at
can-
the dinner.
You said it. No, you can no. Congressman Richie Torres, who was, very, very intelligent on all these matters. And he, again, kind of pointed out just like the fact that you said you can spend a couple thousand, donate $1,000 and get a senator's phone. The access to state governments is even lower, and how I think there's some very smart people that are working right now to try to dismantle the bit license. So God willing, Ben Losky's good work will be undone soon, and someone can do business in New York without having to go through all these hoops.
And just to quickly give people some context, this isn't that an aversion to having any sort of regulation or having to show an audit and following basic laws. It's with NYDFS, it's a whole nother tier. They're kind of almost in your company, nonstop, and it just creates tons of work for you. And it frankly probably does very little, if anything, to keep anyone safer.
And particularly the case with the bit license, because there are many companies that went bankrupt in 2022 did have the bit license. I think this actually does highlight another question, though, that I was curious about. Recently, you published the River financials on when I say River financials, I mean the River space financial statements, lowercase, on Twitter, which I think is interesting because you guys as a private company, obviously you have no obligation to do this, but what was kind of the motivation for that? Obviously, people love the transparency, but...
Yeah, so our mission at River is to build the most trusted financial institution in the world. And so every day I wake up thinking, what can we do to make that, get closer to that, right? We're not the most trusted financial institution in the world today by any means, right? It's probably JP Morgan. But I always think of, okay, step by step, how do we get there? And I was on a walk last fall in Argentina, and I was just thinking, what if we just published our financials? And I couldn't think of a good reason not to, kind of let it soak internally for a while. And we were like, yeah, like, how do people know that we're financially sound, right? We prove we have the Bitcoin, but we don't prove that we have, like, we're not going to run out of money or something and have to shut down operations tomorrow. So why not? And that was basically the thought process.
Which is, again, one of the strange things about these many Bitcoin startups providing financial services, or crypto startups providing financial services in general. They're kind of part of the same VC rat race where it's like growth at all cost. Do whatever you can to basically grow top line revenue so you can raise more money at a bigger valuation and kind of keep the whole train going. Obviously, when you're talking about like financial services, particularly with bearer assets, it's like a totally different universe, and we don't need to point to the Mt. Goxes and BlockFi's and FTX. But I think it was really interesting to see that because as someone who runs a public company, coming up with financials on a quarterly basis is a ton of work. Public companies are required to do this, but private companies certainly are not. So
yeah, although one of the things about being regulated at the state level is we've actually had to have audited financials for the entire existence of our company. Even when we were 4 people in a room in San Francisco, to have any licenses in the States, we had to have a financial audit. So we've actually had audited financials ever since we started. So it actually wasn't extra work. We already had that infrastructure, and it was more just a matter of publishing it and packaging it for everyone.
And that's just part of having a money transmitter license to even offer people to buy, sell Bitcoin?
Yeah, so the way we're regulated at the state level is we get money transmission licenses in all the different states we operate. And all of those regulators require financial statements that are audited because they don't want people operating as money transmitters in their state that aren't financially sound.
But then there's a federal one, right? MSB.
So a money services business isn't a license; it's a registration. So you're regulated by them, but you're not licensed. You just tell FinCEN, I'm engaging in a money services business. Here's what I'm doing. And you submit it on their website, and then you're just expected to follow the Bank Secrecy Act and all these laws, and they'll come knocking if something happens they don't like. That's basically how it works.
Very interesting.
So we had Hester Peirce, and Ross Stevens here a couple of weeks ago. Hopefully we're going to get that posted soon. That's going through like edits and everything.
That was a good talk.
I'm sorry?
That was a great talk.
It was a great talk, and we talked about this, right? There are some politicians that are going after the Patriot Act. So all of KYC AML stuff boils down to the BSA, the Bank Secrecy Act, and the Patriot Act. There are some politicians that are, suggesting it would be good if we repeal the Patriot Act. There are 0 politicians that I know of that are talking about the Bank Secrecy Act in this way. And I asked that question during that talk, and Hester Peirce said that's a third rail in Washington. Like we can't even come close to talking about that openly. But there was some encouragement there because she agreed that it's detrimental to individuals' right to privacy, it's detrimental to businesses, and there's this cottage industry that makes a tremendous amount of money off of this shit. So there is a glimmer of hope, but I think that Bitcoiners should be really really dialed in on the BSA as the final boss.
Yeah, and again, for those who maybe are unfamiliar with what the case might be against the BSA and sort of some of this KYC information that's required by currently required for financial services to collect from you. I think there's sort of no short. It feels like these days everyone's just sort of used to the fact that there's always a new data leak, and certainly with the case of some of this financial KYC information for financial services businesses. Basically all of our information is somewhere online for sale. Our identity could be stolen. If someone just bought this stuff online, and in large part, a lot of that stuff a lot of those data leaks came from financial institutions that collected that information, allegedly to sort of protect the end customers, but obviously sometimes things backfire. Did you raise your hand or no? I did, yeah. I'm happy to. There was more BSA talk than I've had in a long time.
Actually be related, but yeah. So there's a lot of conversations in the Twitter sphere about activity on chain, and one of those activities is something called PayJoin, which is a protocol. And there's a fantasy, I think it's a fantasy, but we're hoping an exchange like yourself might actually be a participant in pay join protocol and would allow such activity. Or what do you think about that? Is that something that...
It's an interesting idea, basically allowing depositors to join coins kind of together with our cluster.
Yeah, and any withdrawal, you're actually part of that
Yeah.
coordination round. But
Yeah, it's definitely interesting. The challenge we face, and I don't know where the guy was who made the point earlier, was with banks are sort of the ultimate arbiters of, like, are they okay with what you're doing? Is all of these regulatory regimes, and including kind of the bank checklists, is you're kind of abiding by sort of the general norms of, like, the regulated on-chain transaction behavior. And so, like, the risk of us doing something like that is basically pissing off our regulators and our banks.
I think the way you might be able to... I used to work for an exchange. I couldn't get this idea through, by the way. But one way to position that, you have to find the right congressperson or whoever, but through consumer protection. Because the fact that I can visibly trace any activity is detrimental to consumers. And if you pitch it like that, I think there's a play there on consumer. There's huge amounts of consumer protection laws state to state. I'm sure you already know this.
Definitely. Yeah, it's a very interesting concept. It's something that I'm actually... I'll chat with my GC about it.
You could be the first exchange.
We could. Yeah. Good question.
So one other question that comes to mind as we're talking about this, again, we talked regulatory, treasury strategy companies, River, how Bitcoin's changing. One thing I'm curious about, like all these topics, there's been a lot of discussion around on Twitter, in the Twitter sphere. What do you think is something that people aren't talking about, that having been in Bitcoin now for so long, having built a business through many cycles, is there anything that you look at and it's like we're sort of being distracted from some of these foundationally important issues by some of these shiny objects?
Well, I mean, I think one that is always really hard for people to value is maintenance of Bitcoin Core. It's super boring topic, right? But, like, maintenance makes the world go round, right? Maintenance is the reason our machines don't break when we don't want them to, and our buildings don't fall down, right? And so making sure that we're doing enough maintenance of the software that powers Bitcoin, it's a very underappreciated thing because nobody pays attention unless something goes wrong. And the reason things don't go wrong is because people are putting in the effort to keep this software up, holding up a nearly $1 trillion industry, kind of thanklessly kind of fixing bugs and testing and all of this stuff. And so it's kind of like, what's that meme? Where it's like it's an upside down pyramid. You have like 10 people doing real work on this thing that is like, there are like 10 people down here. Or there's another XKCD meme of like open source projects, or like this one project that this one random guy in some small town maintains is like, if it falls, like this whole like software industry breaks. So it's kind of like that is like kind of the thing that I think goes underappreciated. Doesn't necessarily need to be discussed more, but I think people should have more appreciation for the work the core devs do because things haven't broken.
No, it's a great point. And I remember when Chain Code they released a podcast, was it back in like started a podcast back in 2018 or something like that? And I don't know if it's still going on, but I remember listening to some of the episodes, and it's basically one of these core devs talking about, I've spent 2 years, 3 years just working on sort of when Satoshi wrote the original version of Bitcoin Core, how the wallet aspect of the software was kind of completely enmeshed in everything else, and so someone basically was just going and painstakingly trying to separate the code related to the wallet in sort of a clean way that made it a little easier to maintain, easier to manage, and that is absolutely thankless work where that person's not making as much money as Brian Armstrong or some of these Bitcoin mining execs and all this stuff, but still super important work. I'm curious. Do you think with what you're seeing with Brink, do you feel like there's enough sort of new talent coming in, or do you feel like the age pyramid of talent coming in is sufficient, or do you think that's going to be an issue at some point where we need to get more people in?
I think it actually is decently strong because of the work that the Chain Code and a few others have done, where they have these programs that help make core development more accessible and try and handhold new smart young people who are interested in the project. So some of the key people in the Bitcoin project today are the youngest they've ever been working on Bitcoin. Some of the most important maintainers are in their 20s, and that wasn't actually the case in the early days of Bitcoin. The average age of the Bitcoin core developer today, I would say, is materially lower than it was 10 years ago, which is, I think, a good sign.
No, that's great. I mean, well, yeah, this was well after I joined, but it was crazy when you hear about some, for example, some high school kid is now, a Bitcoin core contributor with the Bloom app. But let's see, yeah, any other questions, really?
Just a question while we're talking about developers, and I appreciate you're tied up with sort of Brink and funding the core developers right now. Do you think there is a need for developers working on other implementations just as a safety check down the line in case there is capture of core developers? I know maybe it's overblown today, but does there need to be that?
There's always been a debate around that of like, do you multi-implementation or single implementation of a node? I think the Ethereum ecosystem tried out the multi-node implementation, and from what I can tell, people typically just go back to converging around a single implementation. So I actually think, I don't know if that actually keeps it in check, right? I think that if you look at the Bitcoin node implementations today, there really aren't separate implementations. There's just somebody takes core and changes something slightly downstream, and they call that a different implementation. So there's really only one implementation still. Like Knots, for example, it's just Bitcoin core where one guy can commit to it, like unilaterally. So, it's like not really a different implementation, it's just a different set of security guarantees with some extra patches. But it's a good thing. People should fork core and experiment with it and try learning and trying new things. Like there's no, if you want your own mempool logic, fork core and do that. I don't see anything wrong with that. Yeah.
There is another. LibBitcoin is a full teardown of the Satoshi reference client. So Knots is a fork of core with a smaller team that kind of fucks with it a bit, and then you have to trust them. Suboptimal, but LibBitcoin does have some promise, and I will die on this hill. I've been working with LibBitcoin for a long time.
Yeah, Eric Voskuil is a really smart guy.
And I get nothing out of LibBitcoin. I do this.
I like Eric Voskuil. He's a smart. Yeah, no, it's. There are other implementations. There's Bitcoin JS. There's there are other implementations.
Well, that's JavaScript. That's just like a translation of core. It's not a full teardown.
Sure. Yeah.
That's also like a fork or like a translation. Anyway, we don't need to make this a Coinbase.
We say this is a Bitcoin bar. It's actually a LibBitcoin bar. Thomas doesn't make a ton of money from it, but he does get a 5% royalty on every copy of Crypto Economics sold at the front door.
It's pronounced LibBitcoin. I've been trying to change the name for a long time. It has fast sync. It has a much faster sync than Bitcoin Core. It's not a full node implementation yet. But there are certain aspects of it that are superior to Core. Yeah.
And shout out Eric Voskuil. He's a very, very smart man.
A very smart guy. Yeah. Bitcoin Core isn't some amazing like the most beautiful code ever written, right? It started as a toy hobby project.
It was horribly written.
It was good enough, right? But that's how most stuff starts, right? It's like, look at JavaScript, right? JavaScript is the language that powers the internet. And no one, if they could design a programming language from scratch, would make JavaScript, right? It's got a lot of issues. But it was just like, Mark Andreessen Brendan Eich, when he worked at Netscape, threw up in a few days some scripting language to program things on a web page. And 25 years later, it just had got momentum and nothing could replace it. So that's just sort of how this stuff works in the world.
Kids these days, no C++. Yes.
Yeah. It's a different topic, but can you take a few minutes to talk about quantum and what you see for Bitcoin in the future?
Yeah, I think we should take the risk seriously. My personal take is I think we're very far away from a viable quantum computer. And for those of you who aren't aware, in Bitcoin, the thing that allows you to prove that you're allowed to spend your money is your ability to cryptographically sign a Bitcoin transaction. And the way that that math works for doing this signature uses something called, it relies on an assumption that a certain type of math problem called the elliptic curve discrete log problem. I won't explain what that means, but basically this certain math problem is very hard. And hard means that if I sign something with my private key and I show you my signature, you can't figure out what my private key was. You can't go backwards, basically. That's what the hard. So we assume this certain math thing is hard to unwind, hard to undo. If you could figure out my secret key from my signature, you could steal all my Bitcoin, right? Now, these hardness assumptions assume our knowledge of math and a classical computing, meaning microchips that have ones and zeros, and that's how they do computations. Now, a quantum computer is a whole different paradigm of computation, and there's a theoretical way that this new type of computer could potentially efficiently crack this math, right? Now, it's theoretically possible. There's still like an open question of, in practice, is it possible to actually build a quantum computer capable of this? You'll hear different opinions from different people. There's actually going to be, I think, a summit on this in San Francisco in a few months, which should be quite good, and they're going to bring in some actual. One of the challenges is like quantum computing, understanding where quantum computing is a very high information symmetry. The only people who really know are industry insiders, and the industry insiders often have these companies that are getting investment is reliant on people thinking that it's a few years away, but it's actually not, and so that's where it gets kind of weird. So anyways, long story short, I think we should address it. I think we need to work on a plan towards getting ahead of it. I do think we have time, though.
Yeah, there's a great tweet related to this. What's it? What a coincidence! Your prediction lowers your cost of capital. Like to these VC guys, it's like, yeah, yes. Of course you're going to say the thing that gets you money today.
Right.
So whenever this is talked about in the Bitcoin space, often people say like, well, if that were to come, like airplanes would fall out of the sky, everything would happen.
That's not true.
But that everything would collapse and Bitcoin would be the least of the problems. But then I remember you had put a tweet out, or maybe I heard it on a podcast where you were like, no, like actually like your bank account would probably be safer than Bitcoin. But I don't remember your answer, and that's really what I was hoping you were going to address.
Yeah, so that's actually where that is my hot take. It's like people say that, oh, well, Bitcoin is the least of our concerns because quantum computing will break everything. I actually don't agree with that. And the reason is, I'm trying to maybe break it down in a simple way. What is the easiest way to turn a quantum computer into money? The easiest way is to steal Bitcoin, right? You have everything you need self-contained right there to turn your quantum computer into money. If you want to hack a bank, you actually have to do something called, you have to man in the middle the traffic between a bank customer and the bank. So you have to go, plug into some internet service provider, scrape all the traffic. There's a lot of physical things you have to do. You could do stuff remotely with various attacks and stuff. You need to basically intercept internet traffic and decrypt it, right? It's just less direct, and also there's going to be relatively straightforward upgrades for all of these companies to do, and they'll pay Accenture $1 gajillion to just get it done ahead of time for them. And I just don't think that's a valid sort of rebuttal to the risk to Bitcoin.
It's really good marketing, right?
Yeah, it's kind of like the Y2K, right?
Yeah.
Like someone's gonna make a boatload of money getting companies quantum ready.
It's immediate proof that it works.
Yeah.
It's terrifying, and most people are not going to care.
Yeah.
Because it's Bitcoin.
The internet was unencrypted for many years, right? So worst case, we go back to that, and things didn't fall out of the sky.
Well, so I think in the point too around sort of it's the fastest way to turn the quantum computer into money reminds me of forgive me, the lovely English gentleman who started Brink, John Newbery.
Oh yeah.
Yeah, John Newbery's old point I think he made in TFTC years ago. It talks about basically, it's like Satoshi's coins become the alarm bell for quantum computing because it's sort of like the single largest sort of like the million coins or whatever it is could just be sort of seized immediately with this.
Yeah.
On this sort of quantum computing point, one of the other sort of popular debates in this year has really been around what would we do and what are the tangible steps that we'd take. And some, like Jameson Lopp, have even gone to say that basically, we should sort of change the cryptographic scheme for the digital signatures to something quantum resistant. And then, if folks don't upgrade or move their coins in a sufficient period of time, then we're basically going to burn those coins so that no quantum computer could hack them or it could seize them. What do you think about a proposal like that?
So, I mean, there certainly needs to be, at some point, a path to upgrade your coins to be encumbered by a quantum safe signature scheme. Now, so I don't think that's actually going to be like the least contentious hard fork, or like that's going to be like the least contentious fork ever, right? Now, the big question is, well, that aspect of the fork, depending on whether it's all bundled together, of what to do with the coins that are at risk. Do you let them get stolen, or do you burn them, or do you put them back into the mining reward? Or there's there are some other clever proposals. One is you let them get stolen, but not quickly, right? You only allow like 5 coins to get stolen per block, and you assume that more than one person has a quantum computer, so they'll compete with each other in fees and indirectly subsidize mining, right? Which is actually, I think, like one of the most clever, proposals I've heard, which is pretty interesting, right? If 2 people have a quantum computer, you're both stealing the coins, and then you're paying like the highest fee you can to get yours, and it ends up just subsidizing mining. So I would maybe be most partial. That's like the best one I've heard so far, because it's non-confiscatory, and it potentially subsidizes mining. So
how would you tell? It is basically you have the opportunity to upgrade, and so then any of those legacy like if you want to move from a legacy, from a UTXO with a legacy signature scheme, then you're limited by the protocol to 5 Bitcoin per transaction?
So basically the way it would work is, you probably do like one exact like sequencing is TBD, right? But you introduce a new signature scheme that's like potentially a hash-based signature scheme or some other quantum secure signature scheme. So everyone who's got their keys today has 3 years to move their coins to the safe addresses. And then you probably have you say at block, 1.5 million, right? We're going to, all coins that haven't been moved to this type of signature are going to be classified as kind of pre-quantum coins, right? And then those can be spent with like a rate limit.
Got it.
Right. So you say only 5 pre-quantum Bitcoin per block can be confirmed.
It's just like an arbitrary hard code in the consensus protocol where it's like if pre-quantum coin, then transaction limit on the UTXO side. Oh, wait, what would you do for the change address? Or could you?
Yeah, exactly. Like unclear, right?
But it's very interesting.
The change address,
idea.
you might say only 5 of them can go to a quantum safe address. The rest have to go back to.
Yeah.
I don't know, right?
No, it's very interesting.
Yeah.
Anybody talking about quantum mining?
So, like the short answer there is it's very unlikely to have mining wins with the quantum upgrade, because the quantum there's 2 types of algorithms quantum algorithms. There's Shor's algorithm, which is the algorithm that allows you to crack the signatures, which is basically allow you to steal the money. That's like a very high speed up, right, over what we have with classical computers. There's Grover's algorithm, which gives you a boost, just a little bit of a boost over, I think it's a square root boost to crack hashes, which is what mining effectively is doing. So it's very unlikely that that marginal speed up with a quantum computer will outperform all of the efficiency of like these custom chips we have, basically, like long story short. So basically it's probably not a problem for mining for a very long time.
Well, the interesting thing too is that if it is just like a marginal improvement as opposed to like many orders of magnitude, then basically miners just need to switch to quantum computers. I mean, depending on the unit economics.
So it's a marginal theoretical improvement, but like the practical efficiency, right? Where you have these custom chips, can a quantum computer beat these like ASICs?
Yeah, fair.
Is a whole nother question, right?
Yeah.
Yeah.
No, that's great. I mean, I guess we've been going at it for quite some time now. So maybe just to kind of get to the point where we're wrapping it up. Are there any sort of parting thoughts or things we haven't addressed that you think are, your average humble Bitcoiner should be thinking about or concerned about?
I think for everyone who's been here a long time, this isn't going to be new advice, but there's always going to be something hot that people try and convince you to put your Bitcoin into or put your money into, and you think you're, like this is the new hot thing. Like, I don't tell people to never do that, right? Buy a little bit of some Bitcoin treasury company, but like view that stuff as the casino. Like, have your Bitcoin stack that you're never going to touch, and don't touch it. Like, don't get too smart. Everyone gets burned every cycle. There's always somebody who knows they shouldn't be doing it and they do it anyways. Just don't be that person. So keep a safe Bitcoin stack and budget the money you're going to do fun things with.
It's a great reminder. If we had a really good round of applause for that. We had a great conversation with Trace Mayer, who sort of selectively stepping back out into the Bitcoin discourse, and it was really nice to kind of hear him kind of going back to that sort of low time preference, stay humble, stack sats mentality. Very, very important in this day and age.
Awesome. So with that, let's hear a round of applause for Drew and Alex Leishman. Thank you so much for being here. So next week, we have Leopoldo Lopez. This is a very special one. It's part of our HRF Freedom Tech series on Friday. We haven't done many on Friday, and it's the start of Pride weekend, so it could be pretty slammed in here. But Leopoldo is amazing. So he was the mayor of Caracas and was imprisoned for seven years. A couple of those years, pretty rough, solitary confinement. But he is a freedom fighter, working to bring, freedom for Venezuelans under the Maduro regime. This is going to be a very special one. We have hopefully we're going to be able to show the documentary, which is incredible. Highly recommend. I think both of you have met Leopoldo. He's a force of nature. So that's Friday, next Friday. That's the 27th, I believe. Thank you all for being here. Hope to see you next week. One last note, we're going to dedicate this one. So this is my wife, Megan. We're going to dedicate this meetup to Megan's grandmother, Selma. So 10 years ago, Selma I had been in Bitcoin for about a year or two, and I think a lot of our family and friends were kind of making fun of me for leaving my normal job in the legal world. And we were talking about it at her birthday party. I think it was her 89th birthday at a Chinese restaurant in Larchmont. And I was talking about Bitcoin. And Selma was one of the first family members that said, "That sounds like depression money I'm in." So this one's for Selma. Thanks for being here. We'll see you next week.